Hey, it's Michael Saul, but everybody calls me Tiny. This video is the 200-day rejects, but will it get through the next time? This is stock market analysis for the week of February 11th, 2019. If you would like to receive intra-week updates, www.attackthemarkets.com. Put in your first name, your best email address, follow the directions, and you will be on the intra-week distribution list. Join the Facebook group, facebook.com/group/attackthemarkets. If you like what you're hearing, give me a thumbs up and leave a comment. Whoa, so I move up the rank in the YouTubes. And to never miss another video, click subscribe and smash the bell, and you'll be notified when a new video is uploaded to the channel. So before I talk about the market, how about that Super Bowl pick? All right, I got one right. Of course, I had to just go above and beyond and also give the total. And, of course, I gave the over, and it was the lowest scoring Super Bowl in history. So, 1-1. I mean, whatever. It's better than 0-2, but it's just amazing. I just couldn't be happy with saying I'm rooting for the Rams, but I think the Patriots are going to cover. Couldn't be happy with that, right? I had to push it. Anyway, all right, let's talk about the market. So, last week, the S&P 500 came up to the 200-day moving average, stopped just shy of it, pulled back, had the doji on Wednesday, pulled back on Thursday. Then Friday, it looked like it was set to sell off some more, but it wound up reversing and closing back above the open and for a small gain. So, is this enough of a reversal pattern? Let me get this over here. Is this enough of a reversal pattern to drive us through the 200-day moving average? Well, I'm going to say it could be. Okay, I know that's real committal of me. Committal? That's real committing of me. But we do have some resistance still above here, right around the 280 mark. But I want to see if we could get up enough energy here to bust through the 200-day moving average. Will that be a buy signal? It could be used as a short-term buy signal, but what I want to see is how we act up above into this horizontal resistance, see if we get a pullback, and then I'm looking at that pullback for the buy signal that can bring us up to possibly new highs here. Okay, that's what I'm looking at as far as the short term is concerned. But we still have to get through that 200-day moving average. I don't really see a reversal pattern here. Again, we're still under the 200, so I can't have a bias to the upside. But since we're between the 50, which is this cyan line, and the 200-day, which is the white line, and we're in a kind of ping-pong mode, can't really get committed that heavy one way or the other. Still looking just for the best setups, okay? Like one of those setups is Facebook. So Facebook has been coiling around its 200-day moving average. Well, it's not going to stay there forever, right? Maybe it could stay there a couple more sessions, but it will more than likely move out of this coil one way or the other. Now, it's right dead on the 200-day, so to sit here and go, yeah, the lows are seen, we're going higher, that's just foolish, and I think it's preemptive to assume that. Okay, it could absolutely break down. It could fill half the gap. It could fill the whole gap. It could continue to go lower. All right, but I will continue to bracket this however I can here, depending on how it fills out. And then I'll be looking for a break one way or the other and with a tight stop. Okay, so if it breaks out, I want to have a stop back inside it. And then if it starts to go and get a couple points of gains, then I want to move my stop very quickly to break even and trail stops. You do have resistance up here, up at 188. If it were to break down, I'd be watching for the 20 EMA to be a first test. 50% of the gap comes in right around where that 20 EMA is, and then you got the full gap fill down here at 150. That's how I would manage it. You can manage it any way you want. It's your money. Let's take a look at the rest of the indices. So the Dow was over the 200-day moving average already. Came back and pulled back to the 200-day, a little reversal here. So see if that gets confirmation. The Russell is still lagging. Did have a little bit of a bounce. Didn't have quite the pullback and form the inside candle on Friday. And then the mid-caps look a little bit stronger. And then here's the NASDAQ, which also hit the 200-day moving average, came back down and did the reversal. So that's what I'm looking at on the short term. I want to see if there's some energy built up here, see if we could pop through this 200-day moving average. I'd like to see it pop up, come back and test it. Then I will be watching that pullback for a buying opportunity. Let's go to, and if it doesn't, if it breaks down instead, yeah, that's, you know what, I didn't even cover the downside, right? All I did was cover the Facebook downside. Okay, well, I'm not going to edit this out. I'm going to show you that I am a perfectly flawed human being. So if it comes down to the downside, I want to see it leave the 50-day, right? So that's the NASDAQ, that's the SPY, right? That doesn't mean you can't short-term swing it here or short-term trade it here, but I want to really see it get below the 50-day before I'm looking to take a position. I'd like to see it get through the 50-day, come back and kiss it, and then roll back over. All right, now let's look at some sectors, okay? Can we look at some sectors? Let's look at some sectors. All right, semiconductors. On a nice little tear since hitting the low, pulled back to below the 200-day, but reversed and did close back above it. So that's the semiconductors. Some stocks in that sector. You got Clad Tanker. Watch it around the 200-day moving average. See if that holds. Here's NVIDIA, which is kind of beaten up. Could be forming a potential bottom pattern here. Intel consolidating here. See if it breaks one way or the other. Not pretty sloppy. Here's ADI, which is showing some good relative strength. This pullback may be over, but if it does continue down, watch the 20-day moving average for potential support. Here's the banks. Banks consolidating here right above its 20 EMA. If this were to break out, let's see, we'll grab the trend line real quick. All right, so if this were to break out, you got, where are you? All right, you got the 200-day right above here. Of course, you're not really trading the BKX, so you're looking at like the Bank of America, which has, which basically mimics the banking index. You have JP Morgan, a little sloppy. Citigroup, a little bit better. All right, a little bit better. So I would focus in on Bank of America and perhaps Citigroup. How about the broker-dealer? We didn't look at that last week. Yeah, just consolidating. Looks a lot like the banks. Here's Goldman. Here's Morgan. All right, here's Goldman, Morgan. Here's Legg Mason. It's one possibly for a trade up to the 200-day. But it's so tough getting these little, you're looking for these small wins here, right? I mean, oh, it goes up to the 200-day. What does it do then? Right? If it goes up to the 200-day, then consolidates, then breaks, that's where you could get a potential runner. Let's look at some of the glamour stocks. Amazon, yeah, messy, just messy. Yeah, it's below the 200-day, but it went sideways for a couple of weeks prior to that, so I'm not really looking at this as a potential short signal. But we want to watch this because it's really not acting that well. And, of course, there's a lot of news with Bezos between the divorce and the National Enquirer and all that other stuff. All right, Apple looks like it may have a bottom in place. But I would like to see a pullback that holds the moving average, followed by a reversal. We already looked at Facebook. I'm waiting to see which way that goes. Netflix, so Netflix consolidating above its 200-day moving average. See which way that goes. How about Alphabet, a.k.a. the Goog? Yeah, it's too sloppy for me, so I'm going to be avoiding that for now. Here's Caterpillar, also sloppy. Here's John Deere, looks better, right? Short-term sloppy, even in the longer-term sloppy, but at least it's moving in the right direction here. How about bonds? Yeah, bonds look like they're ready to attack this high up here. Rates are continuing to go down if bonds are rallying. And if bonds do rally, it would be bullish for the market, right? I mean, I believe that it's not an exact correlation or an exact inverse correlation, but right now the yield is being watched, and if the market rallies, that means interest rates are going lower, and that's good for the market, or at least it's perceived to be good for the market, right? I don't want to get into an argument over this. Here's oil. So here's the USO. So could oil have a low? And if it stays above the 50-day, this may present a buying opportunity. Again, I can't get biased because it's under the 200-day moving average, but perhaps it wants to inch its way up there. Here's gold. Yeah, Mike Swanson really, really nailed this. Right here, I'd be watching for this coil. This is a short-term uptrend. I want to see if we can get back up to the highs here in the 129s. This is the GLD. So, quick recap. Rejection at the 200-day moving average. Well, let's start right at the beginning. I got the Patriots right. Yay, I got the overall. Boo. All right. So, quick rejection off at the 200-day moving average, but we're between the 50 and the 200-day. If we coil up here, I would like to see us bust through, test resistance, pull back, and that's when I would be looking for a buying opportunity. Although if you're aggressive, you certainly can use the break of the 200-day as a buying op. On the downside, I want to see it break the 50, come back, kiss it, and then continue to roll. Again, if you're aggressive, you absolutely can use the break of the 50 for a shorting opportunity if it were to get down there. Questions? Tiny@attackthemarkets.com. Sign up for the intra-week updates, and I will talk to you during the week or in next week's video.